Okay.
No.
All right. So let me give a quick review here. Okay. So this one here, you start with the Asian close. Okay. So Asian close, we have this one. Okay. We have an immediate bias. Okay. And you can see here. And then from here, from between the Asian close and 15 minutes before the New York Open, you have to find the highest and lowest point, draw the range here, and identify the pattern. We see that this is a bearish bias. Oh, sorry, bullish bias. This is a VCB pattern, right? We have a VCB pattern here, all right, and where this VCB pattern is forming. Where this VCB pattern is forming here. Okay, the VC pattern is clearly, if you just draw this one here, 1, 2, 3, this is a clear VC pattern, right?
Yeah.
Yeah. Okay, so with this VC pattern is a bias. It has a bullish bias, right? So we have to find the source of this one. The source of VC pattern was from here. We have a SOT. We have a selling climax here. After SOT, we have a range here, right? And of course, I told you that at the third touch, we draw the line, right? Like the selling climax reference line. So if this is selling climax here, okay, this is AR here. Just quick. Start marking down your schematics. This is secondary test. This is spring. I call it as SP. Okay. And of course, after spring, this spring did not complete here, right? Remember, if you think that this is a complete spring, it's not. Spring's completed only after the completion of this one, right? So this whole is a spring here. Remember this, right? So this is spring. Okay. After spring, what do we notice?
That's a spring.
Yeah, if we extend this line further, it lines very perfectly here. Test of spring. T, SP, test of spring. Okay. And if you want to draw the channel here, you can draw.
Like this point, we wouldn't consider that as the highest point, right?
This one?
Yeah. Would we be considering that as the highest point?
Well, basically, if you if you go to the 5-minute time frame, because this is very close
Mm.
up, right? I suggest you to draw the channel. If it's very here, right, then you can go for here, right? Okay. Now see here, you have this one here, equally standard point here. All right. So yes, if you go to the 5-minute time frame, you can either draw. Yeah, this one here is, we do have a highest point here, right? Similar point here. So yeah, we can take this from the start of this one, right? Because it's not a major one. It's a very minor retracement. Do you understand?
Mm.
For example, if you have a major
Okay.
one like this, okay, starting from the downside, it's a major one. This one, it goes up. The price is already in a range here, okay, and we have a supporting point here, higher point. We have a supporting point here, right? So this one is not the major one, right? The major high. So we can draw from here. Okay, this is the first way to draw. And if you don't want to do, if you don't want to draw this one as well, there's another way to draw. Okay, I can identify the range. It's a test. Okay, can identify this range here, starting from here to here. This is also very acceptable. So that's formally becomes a spring here, setup here, and goes up. Both are fine. Got it? My point is to determine the short-term bias. Okay, because I don't trade Asian Open, right? Asian close, we don't open between Asian Open and London Open, right? We only trade from the London Open. So this, and this is gold, right? We are only discussing the gold, right? We are not on GU. So okay, so there might be a setup and good move in during this time, but it's a GU, right? So we don't have to care about it, right? We just have to determine the short-term bias, right? So let's go on the 15-minute, because 15-minute time frame it's not visible. So I did all of this, right? Okay. And after this, the price went up from the spring, or you can also draw this channel if you want. You can draw this one horizontal as well. Both are fine. Our main bias is, so from all of this session, what we determined, it is what? The price finally broke through this what? Range here on an increasing volume. You can see here. The price is on an increasing volume, right? When it broke up to the upside. And then the price accumulates here, right? Reaccumulates. Am I right?
Yeah.
Yeah. So this is, the price is also reaccumulating here. So this is obviously, when you are between here, I suggest you to go for the 5-minute time frame. See, there's a high jump here, increasing volume on the breakout. You can see increasing volume on the breakout, increasing on the breakout. So this is what? JAC. Am I right? If this is
Yep.
JAC, then what you will follow? This is what? Reaccumulation. Am I right? So from the 15-minute perspective, it was VCB pattern. From the 5-minute perspective, it is what? Reaccumulation structure. Both are reaccumulation, right? Got it?
Yep.
And
Okay.
then before, and then we have this one, a breakout here, high point. So when the price come back and test this region at this area, you already know this is what? You can see increase in volume. Focus on these two. Focus on these two. Increasing volume. Once it's break away from this technical level, and now the price would come back and retest. Okay, this is your point of taking the trade. Right? Stop loss. Stop loss, you can just, and of course, I don't take trade on 5-minute. Let's go for 3-minute now. Okay, now see here. Okay, you see increasing volume here on the 3-minute time frame. Very clear, right? The price came back. Okay, and then the price came back and then reversed here and now testing. This is a hidden spring here, right? Hidden spring. Got it? Increasing volume as well. Just take the trade. That's it. Place a stop loss right over here. Right? So this should be 12 minutes after the New York Open. So just take it to 2-1. Okay. Finish it. Got it?
Okay.
Yeah. And now, if you capture this one, okay, and what happens here? The price is going up now, okay, and the price did a little bit trouble here. You can see it did a little bit small range reaccumulation, right? We have this one here, and then we finally broke out. Now here you would say, oh, we should go against the trend. Many people will try to enter and short the trade, short the market like this, but eventually they will end up failure because they would say, oh, this effort is no result and it's kind of upthrust. No, don't take like this. It's a very narrow range, right? And secondly, we have a bullish bias. Sorry.
Yeah.
Okay. And if you draw, and if you draw this structure on a 3-minute time frame after this JAC, this is JAC, right? After JAC, what will happen? Tell me. Draw the structure. This is what? Reaccumulation. And this is again JAC. Am I right?
Yeah.
So of course, after JAC, what would be the form of? What would be the form? It's reaccumulation, right? So reaccumulation, you don't short the market on upthrust. Remember that. Okay, you are against the bias. It's already reaccumulation. Got it? And then we see a breakout here. Okay, and then test of this no demand. You can see, sorry, no supply.
Yep.
And the price, sorry, and the price would go up technically. This is second entry. Placing a stop loss below here, second entry. Okay. Just go for 2.15 to compensate with spreads. Okay. All right. And then after this one, this is again increasing volume. And what do we see here? Now, why would this not fail? The reason is that this one, okay, this attempt as a fake breakout. Okay, see the volume here, but see the volume of the JAC. Which one is more larger?
JAC is larger.
Okay, so of course this will not fail the market, right? We have a larger volume of JAC. Okay, and then we
Okay.
have again JAC here. Again, after JAC, what do we see here? This. This is again
Upthrust with high volume.
a reaccumulation. This is again a reaccumulation. Yes, this is reaccumulation, but when we saw the upthrust with the highest volume and it outweighed the last JAC volume. So of course, the bias is now shifted. I'm not saying the long-term bias. I'm talking about only the short-term bias. Remember that. Okay. All right. And when it's shifted, and when it is upthrust, it is UT. Okay. So when the price come back to retest it, and we got what? No demand. Right? No demand. Am I right?
Yep.
So of course, go for 2:1 ratio, and you have the trade now. Simple. All trades are entered. Now all three trades are entered. Now the fourth entry after this one. Fourth entry, of course, after this one, what do we see? We have increasing volume. We have a good sustained volume here. It's not decreasing, but it's average volume here. Okay, and then of course we are coming from this structure, so it is a reaccumulation structure, right? And what do we see here?
Redistribution, is it?
Redistribution structure. Sorry, redistribution. Okay. All right. So this is the point here. And what do we see here? Hidden upthrust, right? Hidden upthrust, huge volume. This one is little tricky. Okay, whenever we have this kind of huge upthrust where there's a huge bar, the price will always come back and test this region. Okay. So what I usually do, so people just place a trade, often like take their stops like this. So price comes back, hit their stop loss and goes back, right?
Yeah.
So yeah, this stop loss, this upthrust, hidden upthrust was tested right over here, this point. So yeah, you can consider it the safest point to trade. Stop loss here. Okay. Now, as I go down your just right over here, the price will just keep on drifting down. Okay. So once you have this, that you don't have a chance, you don't get a enter, you don't get a chance to enter on the test, right? On a 3-minute time frame. So what you can do, you can also shift to the 1-minute time frame to find a more perfect entry. So basically, you can only do this when 3-minute and 1-minute time frames are open side by side. Okay, now see here what happens here. The price comes back, tested this region here. Okay, got it?
Yeah.
Yeah. But that's okay if 3 minutes also fine. What I'm trying to say is that people just try to take this kind of setup here, place this stop loss right over here, and the price comes back, test this region, and then your stop loss hit, right? If the UT is very large, this UT is very large, very huge. The UT, if it was ideally here, that it ended like this one, okay, or right over here. This was a small UT, right? You could take the trade. But if UT is a huge bar like this, right? It is always tested.
Yeah.
Got it? It is always tested. Now, if you see, it's a huge bar here. It's always tested. Got it?
All right.
Yeah. Now this is spring here. You can see test of this level. Okay, then you see it is always tested, as I told you. And the price shoot up with 2R. Right. So people just take this off and take the stop loss. And then what happened? The price never go to the 2R and they're back to the loss. And then what happens? The price again comes back to this region or the last low. Okay. These are the 2 important points. Price tests this region. Okay. Tests this region here and then goes up to the profit target. So it's better to wait for the test if you have a huge spring bar or huge upthrust bar. Got it?
Good. Can you repeat this section again?
What do you mean?
Like, okay, so this one has a huge bar, right?
Yeah.
Yeah. So,
For example, I'm
about
telling you
the,
here, like just see over here, huge bar here, right? Huge bar here.
yeah,
This is spring, right? This is spring, right? This spring is fine. You can take your entry down, stop loss here, and it's fine. But how about this spring? This spring is very huge. You can see we didn't,
yeah,
and if you enter over here, it's our stop loss will be too huge, right? So
right.
always wait for the test.
So this one, would I be testing at the bottom of the huge bar,
Mhm.
or or the last low reaction?
You mean this one
You
here?
get what I mean? Yeah, yeah. Should I be waiting for the price to
Mhm.
go to this low,
Mhm.
or should I be
There are two things here. Okay, the first thing is the price can come back and test this region. Okay, this is first.
right?
Right.
Yeah,
This is the first way. Price can come back and test this region and go up. Okay. The second
right.
one, if there is any technical level, like this one is a technical level we found over here, right? So the price would come
Yeah,
back and test this technical level and go up. Got it?
yeah,
Or the third situation is the price will come back, okay, and will form some sort of this kind of situation, okay, and then there will be another like sort of this one, right? You form a reference line, so it's the first higher low, and the price will test the first higher low. This is the three situations that can happen. Got it?
okay.
Yeah. So in this part, it's what is the first higher low situation. Any questions?
No,
Okay. So this is what I'm trying to explain you. You see now here this one. If you just draw this part here, let's suppose the price is coming down. If you draw this structure, as I told you, this is not a major low. Okay, it's not a major, and the price is already in downtrend. So in this way, we can draw from here, from the top side. Got it? When to draw from the top side and when to draw from the when it's a major high. Got it? When we see the major high, and this one, the price is already in a downtrend, and there's no reversal that we
right.
did not form a major high, right? Yeah, this one.
Yeah,
So we can draw the line from this part, right? It's okay. All right. So now you have to see this one is this one, this one. What do we see? I see some sort of okay, SOT, right?
yeah,
And
right.
then see an SOT here, right? When we see that there's a breakout, there's an increasing volume, breakout, the price came back, hugely tested the region, and you see here. Now, of course, you cannot take this trade. It's very huge, right? The test is very huge. Okay. At this point, you have to see where the price will test this region. So we draw this, if this is this one here, the price went up. So obviously AR would be here, right? Right. So see the price make a huge test, but it's a very huge bar. The price make another attempt and tested this. So this huge test, this huge uh, hidden spring bar is retested again.
Hold on, 1 second.
Sorry,
Why is that AR? Why is that considered AR?
which one? This one? This one?
Yeah, yeah.
Because this is a selling climax. Okay, let's see. Three touch selling
Okay,
climax.
yes, okay, right. And then this
This
one
one.
should be AR.
Yeah,
Okay,
yes.
almost there.
Yeah,
Yeah, it's
yeah,
about there as
same.
well. All
Yeah,
right.
so I
Okay.
was just assuming it. I'm just showing you the AR level. It's not a picture perfect, right?
Okay.
Okay, so the
All right.
price tested here at this region, but remember that it's in a downtrend. We do not have a technical, we do not have this situation where we can go, okay, we should shoot up, right? So what happens here? And you see the time as well, it's already very late to trade at this time, but I'm just showing you the price will not have that much momentum. Okay, the highest
Right.
point if
Okay.
the price came back here, right? And you see here, the price came back here. We have a test here. So if you go this trade here, like for the, what I was trying to say, if you take this trade and you take a 2 hour, it would be too huge and the price would never reach your point.
Yeah, right.
Right. But if you take this short trade here, after a test of this region, okay, this one is a huge hidden spring, the price tested one. Okay. Okay, you can see the price tested the moving average and also this level. Okay. All right. So we draw the trade. Now you see it's easily achievable 2 hour.
And
Okay.
one more time, like how is this a valid test?
This one,
Yeah,
the valid test is just like, okay, this is a huge shakeout bar. You can see huge spring bar. Okay, this spring bar is forming where? I told you, this is a hidden spring, right? When you see this kind of situation, this is a
yeah.
hidden spring. It is a hidden spring of this level, right? So you see, it's a valid test. Hidden spring goes back, tested its hidden spring level, and went up. And there's also this technical level, and there is this moving average as well.
Mm,
Everything lined up.
okay.
Yeah.
Then
For example,
this
okay,
line,
this one is a hidden
yeah.
spring.
Okay. Is there any way that to identify the hidden spring?
Yes, hidden spring is when you see an uptrend here, then suddenly there's a hidden. This is a hidden spring.
See and trend.
Got it?
Okay, okay.
Hidden spring is just like spring. It's an uptrend and then there's a retracement. Okay, but when you see this kind of sudden momentum, like you see down bar and then the price closed down and then reverses up. This reversal here is hidden spring. This is hidden spring. Price closed down here and then reverse. This is hidden spring. Got it? This is hidden spring. You can see over there. Got it? These hidden springs are
Okay,
all great opportunities. Okay.
okay.
Yeah, this is hidden spring over here. This is hidden spring over here. But this hidden spring, of course, as I told you, it's very huge, right? If you take your support, the support will be huge. So do it for the test of this level. Got it? This hidden spring level.
All right.
Okay. This is just to define a very just to make a perfect entry, you know. I mean a very precise entry. Okay.
Okay.
So
So
this was
basically, a hidden
mhm.
spring is like some kind of to when the price is going up, and then there is some kind of tracement,
Okay,
and
the
then
price is
when the
going up, right? The price is going up,
yeah,
then there's some kind of retracement, and then during the retracement, okay, you see a very hidden spring level suddenly. Okay, this is a hidden spring.
all right.
Got
Okay,
it?
okay. It's something is very similar to a key reversal.
Yeah, it's a key reversal actually. Hidden spring is actually a
Okay.
key reversal. Hidden spring is actually a key reversal. Got it? This is a key reversal. But of course, you will not trade all key reversals. It depends on the location of the key reversal, right?
Yeah.
Yeah. So just drawing the structure and everything. Okay, the actual work is done during the pre-market. I mean, before the market opens. That's where the actual work is done, right? Afterwards, it's just you just follow the bias and the immediate bias.
Okay.
GU yesterday was tough. For example, GU, many people told me that, okay, it was a little bit tough. Okay, let me give you one more meeting, right? Okay, hold on. I'm sending you the new link, a new invite. Okay.
All right. Okay. Thank you.